The bond market has already, looking for the Fed put levels, and they've already reduced the hiking expectations so much already that it looks to me like there's very little upside going forward here. There's less than 2 rate hikes, or about 2 rate hikes priced into the Fed hiking cycle for the next several years.
You also think that this thing with China is long term, and we're not going to quickly be able to just back off because of intellectual property, and they have a plan to 2030 to eat our lunch, and so we're not going to come to the table and be have a kumbaya, as Andrew he loves that word. I'm even using it now.
So it's only really Trump that's sounded positive on the China trade talks. Everyone else in the administration has sounded much more negative, and Vice President Pence at the APEC summit was quite confrontational with the Chinese as well.
Well, so no relief on rates and no relief on China. That's bad, Saeed. So I don't know why that doesn't make you bullish, does it?
Well, I think we could see a squeeze until November 30th maybe, and then we'll see what happens.
Okay.
But past that, I'm expecting that the tariffs will go up to 25% on the $200 billion.
Yeah.
I think it's possible they don't add the extra tariffs, but I think they at least do that. So I don't think that's great. And the Chinese are easing a little, so their property market's going crazy because they're letting people borrow for their down payments, and they're desperately trying to force banks to lend money. But the Chinese economy looks like it's in bad shape.
Okay, so Kathy, you think they do December and then 2 to 3 next year with the backdrop being growth not as strong as it was this year?
Yeah, I think they really want to get to their neutral rate, which is either 2 3/4 or 3%-ish. I think the talk of going beyond 3% is now going to die down.
That's what I think too.
As growth shows some signs of slowing, and inflation still really hasn't picked up all that much. So I don't think that that's a terrible scenario. I think 2 3/4 to 3% of the Fed funds rate isn't sky high, but it could flatten the yield curve some more in the absence of any increase in inflation that's really, surprising from here.
And it probably, even if growth did slow to 2.5% GDP or so, 3% Fed funds doesn't sound that out of whack.
I mean, the short-term and long-term rates have moved up, not on inflation expectations, but on growth expectations. And so as we sort of settle into a growth rate that's not influenced by the fiscal stimulus, that's closer to 2.5-ish, you would think that rates would level off. But 3% is not that high.
Are you, it's not necessarily your expertise, or maybe it is, but do you feel negative or pessimistic about a China resolution?
Well, our House view is that it's really hard to say because we don't even know who really speaks for the administration right now on trade. So we're getting a bunch of different views. We think there's still some hope that there's a settlement short of, more.
I'm looking for a wink and a nod from both sides, like, because China's markets are down. They don't need this,
And the U.S. market's starting to
nothing gets done, but they both say, oh yeah, we're both winning. Oh yeah, we did some great things here. Don't you think that's possible?
Maybe,
part of the deal
that doesn't necessarily play into what the president thinks about trade for years.
There's other people that say if you back off when you've come this far to try to finally handle some of this, that's not good either. All right, Kathy, thank you. Saeed, thank you, Saeed. Haidar and Kathy Jones.